Hello friends, good week. How are you today? This is a weekly review for 14th of April 2013. Well, last week was very interesting week. We had several opportunities. We got some interesting moves on Pacific crosses, like the Australian crosses and the New Zealand crosses on Friday, which is a great opportunity, and I will talk about that later, of course. And mainly, we got amazing moves on commodities. I will definitely analyze that today because I got a lot, and I'm talking about hundreds of emails during the last week asking Vlad, what do you think about the gold and silver? I promised to everyone that I'm going to explain it deeply on the weekly review, so definitely we will cover that here. And also I will cover several of the opportunities I explained on the last week, and I will update them, of course, like the euro pound, euro dollar, pound dollar, and other. Well, I will not cover the intraday opportunities as you remember them, right? I just go over the new things I found on my list and the trades that are still relevant. So, if you don't mind, I will start with commodities this time, as we are talking here about extremely interesting moves. Now, if you remember, I've been analyzing this chart, okay, and I say that I will not be surprised. Sorry, where is that here? Okay, if this move, right, I've been for the last 2 weeks I talk about that, will be duplicated down. If it duplicates down, it means the silver is able to go to 24, 25. It's the same range, maybe even a bit lower. It is still possible, of course. But what do we have to remember? Except this beautiful duplication that we could expect, there are also 4 moves here, as you can see, right? 3 were equal. Now we are on front of 4th, and it also brings us to around 25, and even lower. So yes, I do think silver is very able to drop a bit lower. Now, it reminds me a bit this kind of move, you see? It was a down move, then sideways move, then bam, one day crash. But the thing here is that it was under divergence and it bounced from the 200 moving average. Here, we are way below the 200 moving average. There is definitely more to go. Now, another interesting thing, if we take a 200 moving average, okay, and we measure the maximum sizes where it has been above or below, okay, the 200 moving average, what can we find? Let's take it here, okay. What can we find? Okay, you see that? And right now, guess what? If it's below the 200 moving average, again, where it brings us to again to 25, 24 range. So in my opinion, we are aiming there definitely. Of course, you can go to history and you'll see again it's well, except the 2011 is this enormous move of the silver up, the bomb up, but even then well, we all remember what happened since then, right? Every time it was on the distance as I showed you from 200 moving average, we got retraces back. Now let's go for a bit deeper view. Okay? Silver never on RSI since the last decade. It was never on weekly RSI 20. Never. Could it happen the first time? Yes, of course. And if it pushes a bit lower, it actually could happen easily. From my point of view, this is very important range. If you take a look, there was a bounce and a stop. You see the small range? That was a local stop, right? Where we got then an up move and a retrace down. This level was never tested on the first time that RSI reached 80. This level could be reached. And if I take it to the deeply view, take a look on the weekly chart. Just 1 second. Here you can see. Okay, this is a weekly chart. This is average true range channel. If you take a look here, okay, every time we got out of that, the prices tend to get inside. If we go down to 24 or so, we will be out of weekly average true range. And if RSI pushed lower, closer to 20, this was definitely put pressure on the silver. If we take an even deeper look, then if we measure here Fibonacci on this move, we are now on a silver, as you can see from the bottom. Okay, we are coming closer and closer to the last level, which is around 24, and this is the 61.8 Fibo level. So in other words, we can see silver could go and drop more, something like 20, starting from 25, maybe a bit lower to 24, maybe even 23. But this is the place where we have to be prepared to go and to make a buy. Another good reason is it doesn't matter where you read it right now. Everyone said silver is going back to 15, 17. I read even a report of saying silver is going back to 8. Could it happen? You know what? In many years forward, maybe. But right now, while we're creating a clear bottom here, I don't see that happen. And as I show you, too many things show we are reaching a zone of retrace, something around 25, maybe a bit lower, 24. There we have to be prepared to go and to make a buy. It could take 1 or 2 or 3 even more weeks. I don't claim it's going to happen this week, but I do think there is more to go. And there, on the last time, we're going to get strong retrace back to silver. Now, what about the gold? Well, pretty much the same story, but it looks much more aggressive, right? Let's take a look also on the channel, weekly channel for the gold average true range. As you can see, we are getting out of this channel, right? We are getting out of this channel. Gold created almost a weekly Marabouze, almost. Now it means we are reaching a bottom. Take a look on the weekly RSI. It comes closer and closer to 20. Now, if you pay attention, okay, last time the weekly was around 20, RSI was around 20, was here on 1999. You see that? 1999, and we all remember what started since then. All right. Now, again, in my opinion, it's creating a bottom. Where should be the bottom? Well, it's a different story. Now, I will explain why. This is a monthly chart. On a monthly chart, RSI is crossing down, okay, and it breaks the Bollinger Bands. It looks really obvious it's going to continue down. This is exactly the place where we have to be careful. Why? Well, we got a 20 candles right move. Right? It did the job. It did the move back to the 20 MA opposite, right? To the opposite band. Sorry, not 20 MA. It's now creating a bullish hidden divergence on a monthly chart. On a weekly chart, there is no divergence yet, though. But if RSI pushed lower and MACD creates new low, it could go for extreme divergence. In my opinion, the gold will aim all the way to the range in between 1430 up to 1485, which is there right now. If it breaks this level, I will not be surprised if the gold push all the way down to the range between 1260 up to 1320. If we take a look here also, on a move, we normally get all the way move to the support number 3. This is support number 1. This is support number 2 range. So the final move could be all the way here. This could be support number 3. Anyway, doesn't matter how you watch that. I think this down move will end within several weeks, and we will get new bullish divergence forming for the gold. How far it could go? Well, I will not predict it will go for new highs from here, but definitely step back to this trend line at least. This is my opinion for the gold. We are going for the bottom. Get ready for buys. Don't be seduced by such opportunities. If you trade like investor and you don't care to hold and you are able to hold a drawdown, then this is a wonderful opportunity for you. Start to collect that. If it goes down to 1300, collect more. If it goes down to 1200, collect more. If it goes to 1000, perfect, collect more. But it's only if you have pretty fat account and you're able to play with drawdowns. If you can't do it, just stay away and wait for clear stop, clear opportunity. Right now it looks like a falling rocket, but falling rockets on the gold, normally I remind you how they stopped. This was the last falling rocket on the gold, right? Remember that? That happened on 2011. Then we got another falling rocket, and that was here on 2011, at the end of 2011, beginning of 2012, right? Every such a falling knife scenario normally ended with strong retraces. That's why I think right now it doesn't look like that, right? But again, RSI on daily reaching clear bottom, RSI on weekly is reaching clear bottom. There is still more to go. Don't be surprised if the gold will suddenly, from this bottom, like a range of 100 points or so, it's nothing for gold, will start bombing up back to the trend line, maybe even back to the 200 moving average. We are out of every average true range, and it's a wonderful sign that it is creating a bottom. What's my opinion for the oil then? Well, I think the commodities could drop lower. This is my same opinion to the oil. Right now, this trend line here seems like trying to be broken. If it completes the job, we are going down. How low? How low? Well, it could look like a head and shoulders here, so we can go and drop really low, like 86 or 85 again, right? And also to create a Bollinger Band duplication on the same stage. But if it creates a false break, okay, of this trend line, a false break, and pushes up again, then put yourself a trend line here down and put there a resistance, very, very stiff resistance range. And if it managed to break it up, both together, 92.30, if it managed to break this level and hold above, that could bring us a pretty well buy opportunity. If not, if it holds the break of the down move, then oil is aiming most likely 86, 85 levels. And if I already talk about commodities, I want to continue and to finish with the commodities. Natural gas, for a while I've been talking about that for a few weeks. I said 410, 430 are levels to pay attention for a sell. We got a daily divergence, more than 20 candles right. We never got a move yet to the opposite band. Right now it's pushing higher. Let it go around 430, 440. Start to pay attention for a stop. How do we know if we get a stop? A bearish candle and a bearish MACD slope turnaround. When it goes, that's another opportunity to take the silver. Now, just another thing, again, the commodities should be traded like investor, which means trade with the ability to hold when it goes against you, and to add some more trades in order to enjoy from longer term divergence. On a weekly chart also we get a pretty clear bearish pressure, and if it keeps pushing a bit higher to 430, 440, maybe even 460 or 70 range, pay attention to the weekly RSI, which will go closer to 80, and that's pretty important. Last time it was around 80 was here in 2008, and we all remember what happened to the natural gas since then. And as I promised, I am done with the commodities, and now let's talk forex. My opportunities on forex are still around the Aussie Kiwi. I've been talking about this beautiful opportunity on previous week. It went a bit lower than I expected, but again it's playing around a bottom. From my point of view, that could turn to be a weekly double bottom, and well, that's the level pretty much. There's also very, very strong support. Well, where you can see on every chart. If this support is broken, it's a different story. If it's broken, still we have several supports on the way. Not to go for too far, this is a weekly chart. If it pushed lower, you see how many supports we have on the way. You see that? A lot of supports on the way. More than that, If it pushes down, we are getting out of weekly average true range. This is pretty strong sign. On a daily chart, we are on the bottom already. So to make long story short, I will not be surprised if from the current level, bit lower, the pair will rise higher again, at least to the previous resistance around 124, approximately 123.70 maybe, at least. If it managed to break that, then well, I think no reason why it could not go back to 125 and even higher to new highs. That's my opinion about the Aussie Kiwi, which is the first opportunity. The next two pairs I would like to talk about, of course, they will be Eurodollar and Pound Dollar. Eurodollar is very, very, very interesting. Why? It's pushing up, especially after the during the weekend, the Eurozone approved finally Cyprus help program. But strong euro is bad. Every time it happens, Draghi will not have anything else beside to drop it down. They will not just have no opportunities. And this is exactly why I think this bearish hidden divergence is about to make a stop. As I claimed on previous week, in my opinion, it's going to make a stop in between 131.40 through 132.40, and the final level it could make a stop is around 134, a bit lower. There, look for a combination between this hidden divergence and a 4-hour chart continuing divergence that is going to make and form itself. Right? In case the Eurodollar does not push higher, a wonderful sign will be if it managed finally to place itself below 130.40. If it managed to place itself below 130.40, then go for a sell. Again, remember, strong euro is bad to the Eurozone. Every time it happened, we got well, strong down move on the euro. So in my opinion, the higher, the better to sell. Look for sell opportunities on the resistances or a break below 130.40. Pound dollar, pretty much same story. Hidden divergence between the highs, continuing divergence on a daily chart between this two highs. So no reason why I think the pound dollar is going back to 20 MA, at least. In case it completes a break of this trend line, we are going all the way down. Once 148 could be the target. Now if it pushes higher, then I still watch the levels I've been talking about, above 154, 156 then, and the final level over here around 157 plus. All these levels are levels to go and to make a sell. More than that, I will tell you, on the weekly chart, if you pay attention, we get a beautiful bearish convergence. So for the first time after the break of this sideways move, right? And this is why, from my point of view, the higher, the clearer. This is the convergence here. If you don't know what convergence is and you want to learn everything about it, then you can find it in my book in Amazon, Sell the Rally by the Valley. Just click on Amazon, you will see all the info there, right? And that's what we have. That's why I think we should go and look for sell opportunities. Regards the euro pound, then, wow, where these lines came from? Okay, as I explained on the previous weekly review, I think we should go up at least to close the gap. So in other words, I will tell you, just look for buy opportunities, intraday buy opportunities, as long as this gap is not closed. Then I will think it's better to stop and to look for opportunities to sell, because remember what I explained already a few times, this trend line was never tested yet, and it should be. And it could happen during April, it could happen somewhere on May. This trend line could be retested, right? And should be retested. And this is my opinion about the euro pound. Every retrace down, look for buy opportunities on the intraday chart. And now a few words about the yens. Well, we got a drop down on Friday. I'm not sure if everyone aware about the reason, but USA started to say that they will do all they can not to allow Japan to decrease the value of their currency, Japanese yen, so much. Or in other words, they want this level to be the maximum level the Japanese yen decreased to. What does it mean? You see this weekly chart? I explained you not once. It doesn't matter how fundamentally will take place into that. Japanese yen will complete its bearish cycle. I don't claim it's going back to 75, not at all. Not at all. But definitely to close the lower gap. It could go and drop down back to 94. It could go and drop down back to 91. Maybe even a bit lower, around 88. Why no? Why not? Especially if USA and other countries will start to make pressure. And it is relevant, of course, to all the other currencies. Now, to make long story short, I explained not once, this trend line should be retested. It was almost retested at the pip, bit miss. I think that you could start to look for sell opportunities. Right now, we will have G20 meeting, so as I said, I think Russia, I think USA, I think more countries will start to put pressure on Japan, as their exports could be affected by such strong intervention. And how Japan will react? Will they find another solutions? And even though that they claim that they don't want directly to affect the forex market, but they do with their actions. Anyway, as I said, technical, cycle, fundamental doesn't matter. On the next period, it's going to create a top. Maybe this high was already a top, and because of this hidden divergence from everywhere, right? We can look for sell opportunities. On a weekly chart, forming a divergence as well, a drop down is going to come. From here, maybe a bit higher from 132, 133 even, maybe a bit higher from 138. A drop down is coming. And the best way to trade it is, of course, with intraday opportunities or short-term opportunities, because on long term, the only way here is like an investor. And on short-term opportunities means to break off important support, break off important trend line, etc., etc. So this what I see on the yen pairs. I do think the pressure on Japan will grow with as more as they intervene. The pressure will be stronger, and that will cause the market to do its natural cycle. In my opinions, we are preparing the ground for a bears. That's, of course, it's relevant to all the Japanese pairs. And now to the very, very interesting pairs, New Zealandian. New Zealandian was a rocket during the last week. There are many reasons for that. The main reason is the speculation that New Zealand will not have any chance to increase the interest rate. They don't want to do that, as they don't want their own currency to get too strong against other currencies. Otherwise, their exports will struggle a lot. So we got an up move, and once the report about the exports came, the New Zealandian dropped down. Watching on a weekly chart, we still can push a bit higher. Watching on a monthly chart, we still can push a bit higher. Friends, I will say something now, and you remember this day. I'm talking now for the on 13th of April, but for the weekly review of 14th of April. New Zealandian is about to prepare a top and to crash. I said the New Zealandian is going to make a down move with the break of this trend line. I was clearly wrong. The break of this channel did not make what I expected from that. Right now, we are not on daily chart. We are on monthly chart. Monthly chart is forming a divergence. It could be a double top. It could even rise higher. But the New Zealandian is coming to the end of its days. I don't know yet if it's going to happen here on around 86, or if it's going to happen around 088 or around even 090. But if you like an investor and you have a swap-free account, Islamic account, start to get rid of New Zealandians. On the next months, for long run, or the next even a year or two, this monthly divergence will take effect and New Zealandian will go for a crash. Yes, it could push still a bit higher, but to create stronger and deeper divergence. Follow the monthly chart. With the monthly divergence to complete, it's time to get rid of that. But on the short term, we already got RSI 80. We get then during Friday got an down move, then retrace up. It still can push a bit lower to closer to 20 MA. It still could then retrace and push higher. Every new high, from my point of view, is opportunity to sell. And that's the same for New Zealandian dollar, for Aussie New Zealandian, for New Zealandian Canadian, which also is around its top. Take a look on a weekly chart. Okay, very strong bearish pressure. Take a look on the monthly chart. Very strong monthly pressure. Okay, every new high should be treated as sell opportunity. New Zealand pairs are going to enjoy from that. And of course the pound New Zealand, which I've been talking about for some time. As I told you, this break of the channel up could bring an opportunity, down could bring a down opportunity. If it creates a false break here, that could be pretty strong sign that it's ready to start and push all the way up again. Now remember that I'm talking on the perspective of monthly divergence. You see that? You see this divergence? This divergence is going to bring something huge. I told you that for several weeks in a row. It could be here. It could be lower around 175 or even 170. Whenever the monthly chart is ready and completes the divergence, we are going up. All the way up. And this is why I'm sure New Zealandian pairs are going to suffer. New Zealandian is going down. I don't claim it's going to happen this week. Maybe no, maybe it will take time. You saw that I'm talking about weekly and monthly charts, right? It could take time. But the stronger the New Zealandian gets, the better your opportunity to sell that. Remember my words, right? I was wrong about that. It was a channel, clearly wrong. I will not be wrong here. And I'm sure about that because we are talking about monthly divergences. Monthly divergences never lie. Never. And it's going to happen, and it's going to happen strong. We are in front of hundreds points move. Hundreds, if not thousands. Right? Remember that and enjoy from that. That's a great opportunity. These are my main pairs I prefer to concentrate on. As I explained you about the Euro franc, every down move closer to the 200 moving average should be treated as an opportunity to buy. Pay attention to the daily chart. If it pushes a bit lower, we could go and create a bullish divergence there around the 200 moving average, right? So it could be great opportunity around the 121.30, maybe 121, maybe even a bit lower, with a protection below 120. All right, some space below 120. We can go and enjoy the possibility that this pair will try to break up this triangle it creates and move all the way up again. And I would like to finish with several stocks. One of them is Johnson & Johnson. From my point of view, this amazing stock is about to crash. Why? We got a beautiful ride of 12 weeks in a row up. We got a new high for MACD moving average. We got RSI 80, and we are creating here a daily divergence. Johnson & Johnson is about to crash. If we measure until where, well, I will not be surprised to see this level. here around 74, 50, 75. The divergence was started to create itself here. This level was never tested. From my point of view, we are going all the way down to around 75 again. Definitely great opportunity. Another beautiful opportunity I find and I think I can enjoy from that is, of course, McDonald's. McDonald's on a weekly chart broke the historical high. On a monthly chart, if you pay attention, it is about to create a double top. It could be a bit higher, or it could be a same level. This is going to be very interesting opportunity. On a daily chart, it's moving very, very fast, very, very strong, but the RSI extreme is everywhere. I think, as investor, you can start to sell the McDonald's. Of course, it could go to 105, 108 even, of course. But looking on the chart, from my point of view, this gap that was created here around 97 should be closed and will be closed. And I will finish with Yahoo, which also creates a great sell opportunity from my point of view. Let me just find it. Where is Yahoo? Yahoo. Let me find that. Here we go. That's Yahoo. That is weekly chart. Now, I have a question for you. Should I say anything more? I think it's pretty clear. It's dancing around divergence, dancing around RSI 80. Last time it happened was, as you can see, you see that? We are coming closer to 2007, right? And every time RSI was on top, Yahoo crashed. What will happen now? Why it should happen? How it will happen? It doesn't matter. Yahoo is about to crash. On monthly chart you can see nothing, but on daily chart also amazing divergence forming. Yahoo is about to make a strong down move. I think this opportunity is amazingly great because this trend line started from here should be retested, which means I expect Yahoo to drop down for 3 or 4 points at least. Look for sell opportunities there. That will be all, friends. That's my opportunities for the upcoming week, and I think something very interesting is forming and coming closer and closer. I don't have anything to update about the indices because you know my opinion from the last few weeks. Get ready. That's all I can say. Get ready. Within several weeks something is about to happen. What? Why? How? For what reason? I don't know, and I don't care. I believe the chart. That's all. Time will come. That's all, friends. Thank you very much for your time watching this video. I hope you enjoyed it. I know I enjoyed it. I wish you a wonderful week and good trading. Yours, Vladimir Ribakov.